Well, hello traders. How are you? I'm Orlando for Tradimo, and welcome to today's Daily Edge. Why don't we give other people a little bit of time for them to join us? Uh, right now we have some news out of the ECB, the ECB minutes. Likely that slowed down more protracted than earlier thought. Downside risk more per se pervasive. I'm sorry, goodness, that projection cut, etc. You can read out here in my news terminal. The ECB minutes. Let's see the reaction on the euro. Not too much reaction on the euro, but let's continue looking at the news. All right. Mechanical update of inflation projection point to lower path. Uh, Declining of longer term inflation expectations, matter of concern. Easing bias tasking committees had broad support. All right, let's have a look at the euro versus the USD. Let's put on the hourly chart, shall we? All right, some bullish momentum here at the lows. Uh, but that's about it. So why don't we give a couple of minutes to other traders to join us? I would definitely appreciate it. I will leave you with the music that I listen to while I'm trading. It's a recommendation from me. It's called Lofi. Uh, it's excellent beats to trade with. It's super. Well, I feel that for me, it's super productive. So I'll be back in a couple of minutes. All right, everybody, I'm back. Yeah, let's start with today's daily edge. So we saw the news here coming out of the ECB minutes, but we're going to start with some. Well, there's a lot of news coming out. I mean, there's a lot of news to go through today, so we're going to start with the first ones, which was uh, the services and manufacturing PMI out of the Eurozone and out of Germany. Now, right here in the top left of my chart, you can see that the Eurozone Composite Pmi was better than expected at 51.8 versus 51.2 um, expected or estimate. The Euro Services Pmi also better than expected, and the manufacturing PMI was also better than expected in the Eurozone. Germany also better than expected composite PMI. The service PMI also better than expected, and the manufacturing PMI also better than expected. Now, if you don't know what a manufacturing PMI is, well, it's a leading indicator of economic health, and the market does a survey of around 3,000 purchasing managers because the purchasing managers have the best insight on how businesses view the economy. All right, the better the number, the more bullish is for for the currency. All right, so earlier today we were looking at the euro versus the US dollar, and can you hold on just a second, please? All right, so we were looking at the euro versus the US dollar, so that's the first market we're going to have a look at. Okay, so the euro versus the US dollar, it's in a very tight range, as you can see here, with the highs at there's a big zone of resistance at the 11 at the 1.11 level, which is also the point of control of the volume of the last leg down, which means that this is where the most volume has been traded in the past, okay? And this is where we encounter sell orders over and over again, okay? Now, this is important, guys, because when the PMIs, when the manufacturing and services PMI hit the market, I'm going to thicken this chart out because today's price action is very interesting. Well, interesting. Um, it's just an understatement. This is the bullish um, candle that was printed when the PMI services, I'm sorry, the services PMI and the manufacturing PMI out of the Eurozone and out of Germany came out. But as you can see, short after, bears just slammed price down and we hit a new low. Okay. The interesting thing about this is that right now, bulls are jumping in, protecting this level. Okay. And of course, we encounter ourselves inside of this range. Okay. Now, to be completely honest, we do have a position open in the euro US dollar. We actually took a long trade right here with our stop losses just below these lows, and we didn't get stopped out on this trade. Okay. Now, the reason we actually didn't move our stops to break even or close our trade when we saw this is because I was explaining this to our premium members that, mathematically speaking, I've done the back test, and I found out that whenever I start closing my positions prematurely, meaning that whenever this happens, right, and I close my position here, okay, my bottom line hurts, or my profitability long term hurts. Okay, so because I work with invalidation levels, and unless my stop loss is hit, my trade idea is still valid. Okay, and as you can see here, we again are jumping in on a long trade. So yeah, basically this. But if you are not long the euro versus the US dollar yet, yeah, definitely we should. I mean, you should look at this range. Now let's put on some actual uh, horizontal lines here. Now, as you can see, the actual level to break is the 11-12, well, the 11-13 level, okay? Which is these highs right here. First one, then the second one, and then the third one, okay? This is exactly where I mean, I think that this was news traders and mobile traders, very short-term traders taking profit here, but of course also sellers jumping in, and we have that thick volume zone right here. So, in my opinion, if you're looking to buy the euro versus the US dollar, we're going to have a look at what's going on with the DXY after we have a look at the euro versus the USD, because a bearish move on the DXY, or the bearish move on the euro, I'm sorry, on the US dollar index would bring bullishness to the euro versus the US dollar. So if you're not long, in my opinion, um, well, we should wait until we have a clean break out of the 11-13 level, a retest for a continuation. All right. Let's move on with the DXY. So the US dollar currency index is the next that we're going to have a look at. All right. So let me just thicken this chart out for you guys. Earlier today, I had new levels drawn in on my chart. I don't know why this um, well, this chart doesn't have them, but it's fine. But the thing that I'm looking at is this. Okay, now I'm going to put on a few more lines, but I'm also going to be deleting some. All right. Now, if you look closely at this high right here, this is the if you look in the historic price action, this level right here uh, is a very important high, okay? A very important level of resistance that was tested countlessly in the past, and that brought real sellers to the market, okay? Now, right now, we are testing that level again. And we also are around I'm sorry about that. I thought I grabbed my Fibonacci tool. We are also around that 76.4% retracement um, on the DXY. So yeah, I know my chart looks very cluttered, so I'm going to get rid of some levels right now, guys. I apologize for that. I truly apologize for that, and it really hurt my it really hurts my eyes to see such a cluttered chart. Okay, so basically this is what I'm looking at. Okay, so we are testing that level again, that between the 98.35 to 98.40 level. Okay, now this is a key level, in my opinion, that is bringing sellers into the market. All right, now what I'm looking here is this. Even though we brought sellers into the market, or this level has been rejected in the past, we retested the lows, and boom, we moved backed up, and then again right here. So yeah, while this level is key to us, I don't see a clear bearishness in the market, even though, even so that, or more so that, because we are in a uptrend, an immediate uptrend, and of course, a longer term uh, bullish structure, making higher highs, higher lows, higher highs, higher lows. And right now we are trapped here. So what I'm looking at, if we manage to break with this low, we could have a short-term bearish move, maybe to test the 97.70 level, the 97.70 level, which you all know that historically is an incredibly big level for us, because again, I'm going to show you the daily chart, and because if you were not with us during that time, you don't know what I'm talking about. Right here, you can see that the 97.70 level. I'm going to delete this line afterwards. Don't worry about it. The 97.70 level was the key level to break for a while, and we have faked out of it. And look at this: a retest short, boom, and then another fake out of it. Now we are playing with that level on the daily and on the 4-hour chart. Um, and this is the reason that that level is so important to us, and that is the main reason that this level uh, that this level um, could actually be a magnet for buyers to jump in and break with the 98.80 and with the previous highs. So we are going to be looking at what happens here, and if we break with the previous high, well then this whole idea of a retest of the 97.70 level is out the window. But we are going to keep in touch, or we are going to keep this chart in our eyes, because the dollar is king when you're trading forex. We already know that. So let's move on. If you have any questions, just post it on the chat, and I'll go through the chat. I'll go through the chat right now to see if we have any questions. And no, we don't. So let's move on. Let's move on to the next couple of news. Um, and the next couple of news are Brexit news. All right. A couple of days ago, Boris Johnson said that, he repeated again his hardline Brexit rhetoric, that no matter what, he was going to be, or the UK was going to be out by October 31st. But today, I'm going to show you what happened. Let me just scroll up, right here. As you can see, UK PM Johnson, I'm going to highlight it, says we must leave EU on October 31st, deal or no deal. Okay, so he started with this, which, in all fairness, is kind of bearish. Is bad for the economy if the UK doesn't live with a deal. All right, and after that, he said something about the backstop, and right here he changed it. He changed his ultra strong rhetoric, and said, Johnson said we want to do all necessary work on both sides to prepare for Brexit. And then Johnson says, under no circumstances will UK government institute checks or controls at Irish borders. And that is something that has never came out of PM Johnson's mouth, protecting the backstop, because he always said that no matter what he was going, I mean, he was taking the UK out with or without a deal, and that the hard border with Northern Ireland was not a priority. So that made the pound rally, right? And we're going to look at the pound versus the yen, okay? Because it's very interesting what's going on here on the pound versus the yen. Let's go to the hourly chart again. Go to the hourly chart. And right here is where those comments came out. Came out of the wires, right? And it really brought the pound up. But if we go back to the 4-hour chart, you can see that this level is still very much very much rejected. Okay, I mean, we have rejection all over the place on the pound versus the yen, but well, right now it's looking like we might go higher, and that this triangle is actually going to be breaking. Okay, so right now we are testing the 129.45 to 129.50 level. All right, let me just put on the correct coordinates. 50 level. All right, 149 to 150 level, and we are also, I mean, and it's very obvious that this is the point of control, or where the most volume has been traded in the past. And remember that this market profile, or volume profile, is calculating the volume of this move. Okay, now we are trading at the point of control right now, and again, even though that we had these comments out of the UK's Prime Minister's office, we are still rejecting this level. So heads up to the pound versus the yen, because I mean, if we break with this low, it will be very bearish for the pound versus the yen. But we have also that triangle formation in play with the top at the 129.50. So let's move on. Let's talk about gold. Gold has been very choppy. We are still in very much in a bull market, and these are my key levels. But gold has been choppy lately. So let me just show you how bullish we are. Just let me show you how bullish we are. I'm sorry. Oh, how bullish this move is. All right, we started from the bottom, and now we are here. We started from the bottom at around 1277, which is where we first bought gold, and well, we are now at the 15 or below the 1500 level. Okay, now let's just thicken this chart out, because I want to focus on current price action. Okay, now these are my key levels. If you are a daily edger, you already know why. Actually, this should be in white, because they are long-term levels. And if you're a daily edger, you already know why these are very important long-term levels. And we have a short-term base right here. Okay, that we are testing currently. Now, to be completely honest, short-term we are flat gold, because what we are looking for is a clear buy opportunity in the precious metal. Okay, now with the DXY, let's have a look at the DXY right here. With the DXY trading the way it is, okay, a bearish move on the US dollar currency index, right? This move right here would be bullish for gold. But right now, if we go to the 1 hour chart, and if we put a volume profile right here on this range, you can see that we are actually trading below that point of control. Okay, so short-term bearish move on the on gold, but if we manage, or if buyers manage to defend this level once again, meaning that I'm going to thicken this out again, meaning that if we get another fake out, we might have the possibility to buy gold. Okay, but we really need to see that fake out. Okay, and that setup being printed on the chart. If that happens, we are definitely going to be taking a bull, or I'm sorry, a buy trade on this market. But right now, I mean, a very uninteresting chart to me, and it would be bullish on the midterm only if we break with the 1508 level. All right, so let me put on a horizontal line. I'm going to change the color uh, to green. I'm going to be deleting this one after we finish. But I just want to show you the ranges that we are working with. The lows at the 1495 level and the highs at the 1508. So in my opinion, if we do have that fake out here, we could have a short-term buy to test the highs again at the 1508 level, and to test the highs because of this, because of how bearish it has been at this level. But we could also have a continuation higher to test again that 1530. Okay, this is on the bullish side. Okay, this is on the bullish side. On the bearish side, I see no trade and I see no trade opportunity. If you're looking at some bearishness or some bear setups, you're more than welcome to share it with us. Because I don't see any. Okay, I'm looking to the upside on this market only. All right, let's move on. Let's have a look at what has happened with well, the US dollar versus the Swiss franc is a nice market. Again, well, this morning I was talking with our subscribers about the possibility of a short opportunity here. And this is why this is the main reason I use pending orders, because I was looking at price testing this very interesting historic base. All right. Not only was testing this interesting historic base, but we had hit some very interesting fib clusters. Okay, we have hit the 50% retracement of the entire move down. We have hit the 161.8 extension of the first leg up, right? This extension right here, and we had hit the 123.2% retracement of the last leg down. Okay, so very clustered, or very clustered with ratios here, but like I said before, we needed a clean break below this low in order for us to even consider a short position here. And right now that we are breaking with the with the highs, this short idea is no longer valid. So I just wanted to show you that, and let's move on. Let's have a look at another market. Okay, let's have a look at Bitcoin, shall we? But first of all, why don't we have a look at the euro versus the Aussie, the Australian dollar? Okay. Now, if you are a subscriber, you remember that we took this buy right here to the pip, and we took profits here, and then I think that we took this second profits around here. Of course, that we didn't capitalize on the rest of the move up, but that's fine. We did make some money here, and though just visually, there's no ratios here on my chart, but just visually, have a look at what's going on here. Okay, we had this amazing move to the upside, and now we are chopping, or we're chopping, not chopping, but we were in a corrective move. Okay, now the impulsive move is to the upside, so we are going to be looking to buy the euro versus the Aussie. Okay, we are waiting for this corrective move and a clean break of the flag, which we had already. Now, our targets normally are at the top of the flag at around this level, which is this 6750 level. But if you calculate the targets like with the pole of the flag, the targets are much higher. Okay, but that's not what I wanted to tell you. What I want to show you is this. Just let me thicken this chart out for you, because we are at a very interesting level. And not only a very interesting level, but given the fact that we had such an impulsive move, and now seems that the corrective move is over, and we're looking to buy another impulsive move, and that we have broken with this kind of a flag formation, and we are still trading below, above the 63.30 level, I'm going to be hunting for an opportunity to buy the euro versus the Aussie. And not only that, but if you look closely, and if well, if you remember what we were looking at uh, with the euro versus the US dollar, let's go back to the euro versus the USD, because if the euro versus the USD manages to break above the 11.13 level, this would give the euro versus the Aussie uh, some bullish momentum. All right. So for the time being, we're flat on this, on the euro versus the Aussie, but we are going to be looking to for a nice buy opportunity, and of course, only if we keep trading above this base and above the 63.30 level. All right. Now let's put on a volume profile, and let's have a look at where we are with that volume. Now, just have a look at this. Okay, this volume is this volume profile is calculating the volume of the entire uh, move up and the corrective move. Okay, so we are right here trading at the point of control, and this is why I like to look for volume volume zones, because they're important, because wherever high volume was traded historically is where big orders are placed, where big money might step in, and in this case buy the euro versus the USD. And if you can see, the volume decreases as we go higher, so it's going to be easier for buyers to swipe with those sell orders as we go higher. Now, if we break with the lows, if we break with the 63.30 level, and with this point of control, just take a look at how volume thickens. I'm sorry, not thickens, the opposite. How volume decreases, which is the reason that if we have a clean break with the 63.30 level, I will not be looking for a buy opportunity any longer, because it's going to be very easy for sellers to swipe with those buy orders uh, until we hit the lows right here. There's nothing supporting. Uh, there's no buyers here, all right? Not at all. So I'm going to be looking for a buy opportunity right here at this zone. That's what I have to say about the euro versus the Aussie. Let's have a look at the chat. There's no questions, so let's move on. All right, so let's move on. Let's have a look at Bitcoin, shall we? Yeah, I thought that I said that we were having a look at Bitcoin today. And maybe later we can have a look at crude oil and the SPUs. All right. So BTC USD right here. Oh, I have nothing on my chart, but I mean, we can do the work together. Let me see. I have a question. No, volume profile is not the same as volume indicator. The volume indicator indicates you the volume within a period of time. Indicates the volume of one candle. If you're looking at the 4-hour chart, the volume indicator shows you the volume on that 4-hour span of time. The volume profile shows you the volume at a certain level, price level. So the volume indicator is the volume at a certain period of time, and the volume profile is the volume at a certain price level, no matter the uh, period of time. So yeah, there's a big difference, and I like. Uh, it's not that I like, but it's much better to look at volume as a price based, in opposite of a volume as a time play. Okay. Now I hope that clears up your questions, and let's move on with Bitcoin, shall we? So big attempt right here of Bitcoin breaking above the 12,000 level. So let's put on a first line at the 12,000 level, shall we? All right. So here's the 12,000 level, but we need to put it all the way here. So 12,000. I don't know if if you guys trade a Bitcoin or not, but I do think that it is interesting to look at, given the fact that there are some good opportunities to make money. For example, this short opportunity in Bitcoin that I missed. Okay, but let's have a look. All right, let's have a look. So here, I mean, a big attempt of Bitcoin to break again with the 12,000, with the 12,000 level, and bam, sellers stepped in and smashed price down all the way below the 10,000. Now, we didn't get quite to the previous base, but I mean, we didn't quite get to the previous base, but just uh, uh, from a few pips apart, right? Uh, we did test it, and buyers jumped in and brought the price of Bitcoin up. Now, you can look at this two ways, right? You can look at it as a well as a range bound market, or you can look at it as a bearish continuation. Okay, and I mean these are just technicals. Okay, these are just technical, guys. So we're going to be looking at just technicals in Bitcoin. So if you look at this, I mean, if you look at the candlestick formation, you can, I mean, you can see that not only we had a nice setup here at I'm sorry about that, at the highs at around 12,000 for an extremely good short opportunity with a great, well, yeah, a great risk to reward. But right now, I think that you can all see that this is in fact very flaggy, and price in Bitcoin surely looks like it's going to drop below the 93.80 level. Now, this is the 4-hour chart, and if we look at the 93.80 level, or a breakout below the 93.80 level, we should be looking at some levels or some target levels. All right. Now, this looks fairly accurate in the way, I'm sorry, in the sense that if we do calculate with, well, the size of the flag and at the breakout, well, the calculated targets are way below the 89.49 or the 89.45 level. I'm sorry. So, in my opinion, this looks very bearish still, but we don't know what's going to happen if we test the 93.80 level again. Okay, so let's put on some volume profiles just to have a look at where the high volume has been traded already in the past. So fixed range, and let's have a look at only well, only the volume traded inside this range, and well, it's quite interesting what we just found out. Well, we just found out that we are actually trading at the point of control, or yeah, we're actually trading at the point of control within this range. Now, let me explain what I'm looking at. I'm looking at firstly, I'm looking at this volume right here. Before, and I mean, this high volume right here lets me to believe that before we started trading here, the point of control was this. Okay, this is why, this is where, I'm sorry, sellers jumped in. So this was the point of control. But now that we traded below and we broke with the flag, and we are chopping inside this range around the 10,000 level, which we hadn't discussed earlier. It's a very big round number, a psychological level of support. Buyers are stepping in. Okay, now buyers are stepping in. So if we yeah, I mean, if you want to look at the values, you can see the values right here, and the struggle, I'm sorry, and the fight between buyers and sellers that's going on at this point. uh, of the chart of price. So right now, I don't see a buy or sell opportunity in Bitcoin, but I would definitely be looking for a reaction to the 93.80 level. Okay, we are trading below the point of control, so it's pretty obvious that sellers are in control, but buyers are stepping in, uh, and could definitely take price higher. But everything points out at a retest of the 93.80 level, so that's where we're going to be standing in when we well when we when we actually hit that level. So that's about it in Bitcoin. If you have any questions, again, let me check the chat. No questions. And let's continue. Let's move on. So why don't we have a look at what's going on in too choppy, the euro versus the yen. That's not very interesting at the moment. Silver, on the other hand, very interesting move. Again, I have not yet done today's technical analysis on silver, but I mean, we could do it together, shall we? So, very interesting price action right now in silver. Bulls coming in. Let's have a look at what's going on in gold, right? And in gold, again, bulls are jumping in. So heads up, because this is the fake out that we were talking about, guys. This is the fake out that we were talking about. So we might have a buy opportunity in gold in our hands. So let's continue with wow, very big, very bullish move in silver. First level that we are going to be testing is the 1718, the 1719 level. Definitely a level worth watching, because this is where sellers have jumped in the past. And well, just have a look at what has at the three past candles that have been printed. Okay, again, we don't have any lines here or key levels drawn, but that's okay. This is extremely bullish in my eyes. It's extremely bullish, and we are very likely going to be testing the 1719 level again in silver. Okay, now let's put on some key levels on this chart. One of the key levels was the 1687 level, or 1687.5 level, which we failed to test, and well, and right now we are moving higher. But I don't see why. I don't see an actual key level that I would have traded. Again, this is my analysis, and I would have waited for a test of the 1687 level. Okay, I missed this opportunity, but that's fine. It's not within my system rules to trade this buy opportunity. But if you guys have some kind of an insight on or a chart on silver, more than welcome to send it via the chat. All right. So very bullish move here in silver, and we are likely to be testing the 1719 level. Okay. Now let's go back and let's have a look at gold again, and let's see if we can find an opportunity. All right. Now look at the pound versus the yen moving higher, and the euro US dollar moving higher. Okay. Yeah, we're going to look at gold and that fake out that we were talking about. So, I mean, to find a setup, we might as well go to the 50-minute chart. And in my opinion, a true, fake out would be this. Just let me thicken the chart out. I'm going to show you what I mean. A true fake out would be right here. A test of the level, I move lower, and I move higher. Now, I'm sorry, I don't know why my mouse did that, but I would have to see a break above this high, which is around the 1497.50 level. A break above this high would mean that we did went lower, but was just a fake out. So this is going to be the level that we're going to be watching for a buy opportunity in gold, and which will give us again a nice risk to reward ratio. And well, that's about it from me, guys. On today's Daily Edge. If you don't have any questions, let me just have a look at the chat. Rising wedges are bear flag. Okay. Uh, if you don't have any questions, well, that's it from for today on this Daily Edge. We have been live for about an hour now, so guys, I hope this was as entertaining for you and as educative for you as it was for me. And I'll see you guys tomorrow, shall we? And remember that if you are not a daily edger, I have some offers below this video. Don't forget to join my mailing list for some freebies. And if you want to have the exact trade ideas, just join the premium service, and you can get it in the premium community. So I'll see you guys tomorrow, and have a great trading session. Goodbye.